Hi friends, this is a chart made by me based on the um, April and May levels on the 1 day candles because the daily time frame gives you the exact decision levels to trade. So when we check on these levels, so the market is an V-shaped recovery, V-shaped recovery, V-shaped recovery, and after the V-shaped recovery in the April, the market is going sideways with the market is going sideways with range compress, right? The range is compressing here, like the range is compressing from upwards to the downwards and downwards to the upwards. So when the range is compressing, it looks like a flag pattern. So that's what I have explained here. Bullish flag, bullish consolidation. So the third point, chart patterns visible. So the when it is clear, when it should break either side. So already it's a bullish flag, so it can break if breakouts. If it break out this range compress, then it can go to 24,000, 25,000, 24,000, like we have explained here. 24,500, 24,750, 25,000. So when we check on this, right now the market is at 24,150, right? The market is at 24,150 around. So market is around 24,150. So present market is at 24,150, 24,150. So 24,150 to 24,750. That means around 600 points. So 600 points, there is a possibility to catch out if the market breaks upside, right, from this range, compress. So you have to wait for this range compress. So trading in between is very hectic unless otherwise you have a good experience. That means what I'm saying is a good experience is vast observation of the chart, how the premium behaves in conjunction with IV. So IV, you come to know, I will make a separate video on the IV. So when the IVs are more, considering this recent disturbances in the market, like world newses like Iran and America and all these war newses, this and that, the IV has been captured a huge premium in the calls and puts. So if the market is behaving like this, when the range is compressed, if you take a small size, like say 2 lots, 1 lots also, it gives a huge heavy loss if you are in the wrong direction. Suppose say if you think that it will break and take a upward move like call buy, then you will lose very heavily. So what my concern here is, I just checked the chart and got an opinion that there is a V-shaped recovery and there is a flag pattern. So when along with levels like range, compress. So when we check, when we observe, there is a bull flag consolidation and rejections near 24,300, 24,500, like see 24,500, 24,300 rejections, right? Here also one rejection, this also one type of rejection, this also one type of rejection, right? Okay, this is compared to this is matched. So these rejections are at, see, 1 2 3 4, right, with the link with the wicks, and from the down consolidating support taking at these levels. So when the market is at these levels, it is best to take the buy and sell positions between this range compress. So then only you will be into the profit. But this requires a huge time because there won't be movement in the market, and the market will be moving very drastically. For example, if you observe last Friday, the market has absolute sideways, like so the range was like this. Market went up and down and up and down and up. So it is very range of 100 points to 150 points. So when the market opens, it's open gap down, and after that it little recovered, and after that when it is little recovered, after that also it is fall down, after that it's small movements, and it was very huge hectic behavior. So it is best to stay out of the market when there is range compression. So especially for the retail buyers, I mean small buyers. So those who have 50,000, 1 lakh, 20,000 capital to trade, so it gives a huge impact for them. So there can be nothing, they will wipe out the capital. So what I mean is, please take aware of the market, market entry and exit points. So thoroughly analyze. For that only I am making this video. Those who don't have time, so you can follow up with me. I will be creating weekly charts, monthly charts, and live trades and live charts. So live charts I usually make so that to understand by the people, or the viewers, to memorize for future. That means if you check out the live trades recorded on the live charts, you will get more observation of the what to do, what not to do. So here what I am saying is, I'm not recommending any trade. We are just discussing the levels and how the trades can be happen, and what impact it creates, like losses and other things. So you just be taken careful of your trades whenever you trade, but levels are very important. So when we discuss on this, in this chart everything is there, like key levels and analyze patterns, and then what is happening in the market, after what is happening in the market, and bullish scenario, bearish scenarios where it can happen. So candles candlestick psychology, what candles show. Then this is weeks and upper weeks and lower weeks, how small bodies in range, market in balance. Small bodies in range means small, market in balance means there is a balance between sellers and the buyers, so that there is a small candles body, it won't be much, so that means both are in control. So that means there is a range trade, like one range the buyers enters and one range the sellers enters. So key range to watch is 24,170, 24,100, 24,000, 24,500, 24,300. But these are the resistance zones and these are the support zones. So support zones are actively to be considered as to enter as a buy side, and resistance side to enter as a sell side. But at what levels, when the market is breaking this 24,300 or 24,500, you should be aware that it is breakout. So you, to avoid the breakout, best to watch out for breakout candles and confirmations. So confirmations and breakout candles can go through with this range compression, how further the range is compressed and how what forming it is here, like in 1 day candle or day candle or 1 hour candle or 15 minutes candle. So you should know aware of the what is breakout confirmation. So we will do the next video about breakout confirmation, or you can watch out in my live chart analysis where the confirmations we will discuss about the confirmations of the breakouts. So more clearly you will get into our discussion, into that knowledge. So when so chart pattern visibles are there are multiple rejections at these levels, and support resistance zones at these levels, and bullish flag visible is here, and consolidation range here in the consolidation range is happening in this circle, and v-shaped recovery in the April. So considering there is a summary structure V recovery. Summary, what is the summary says? Structure V recovery, consolidation, bull flag, trade bias, neutral to slightly bullish, key levels 24,100, make or break, and breakout about 24,300, bullish continuation, breakdown below 24,100, bearish continuation. So this is how when the summary is all about, but you have to take these are only trade levels, not opinions. So manage risk accordingly, as how I said, position size and management of risk. So stay disciplined, the market will reward you. So thank you. So but you thank you. Further request you please subscribe to my Stocksology at YouTube and Facebook, and then stay updated. Thank you.